Got a swing low price that you can establish. You've obviously got a fast money move, which suggests that there are net buyers involved, correct? There's net buyers coming in. That's not a short covering rally. That looks like there's net buyers coming in. So now that we know that there's net buyers coming in, we're now going to be looking at that and saying, well, first of all, did it go through the halfback to suggest that there's enough buyers? Yes, it did. And obviously, we've got two ways we can deal with this. We can either deal the tipping price or we can deal this price here. Now, the tipping price, what I mean by that is, if that's the new high, of course, the tipping price is going to come in a little bit earlier on that move there. And that means that you could possibly take your sell just that little bit earlier there to try and reach the bottom edges. It's up to you. Obviously, that means you're in relatively early overall, but obviously you're still taking it from the last balance. If you want to wait, the next balance, of course, would put you into a sell trade not that far away, but into this price here. And obviously the objective of that is to reach the bottom tick price. So you're either selling here at 30.75 or you're selling here at 30s. The target price initially is going to be 27.75, and that's obviously achieved on the move. So you get your target price as it comes into that area, and you make a decision. Do you hold or do you close? You make your decision at that point there. Yeah. Pretty easy stuff, pretty easy stuff. And why were we selling? Well, you can see the value was still very short. You can see that this is the only thing that's above the 50. All the other value lines are below the 50, suggesting that the market had quite a weight on the short sell at this stage. Obviously, we've started to see these ags coming in, suggesting that the market is starting to get a little bit agged, which means that the market maker is starting to try and rotate this market a little bit. And with the value then starting to turn back up again, of course, dips into bottom edges might find the market maker playing into those bottom edges. And obviously, that's what we've been seeing so far, as the market maker has been willing to connect with these sellers at these low edges for the time being. Yeah. In the background, you can see the orange line. The orange line is the prem. So obviously, if you're thinking about bidding this, you want to bid it when the prem is getting a big discount on the S&P futures contract. And obviously, that's all you're looking for, is that bid on the S&P futures, or that offer on the S&P futures. If you're buying it, you want to see the prem dropping down into lows to be a buyer into those areas. And obviously, if you want to try and market make it to learn the process, if you're not sure, go ahead, market make it. So you start market making it when, of course, the future is at a discount. Watch for the orange line dropping and start market making. So long as the value is bid, you want to be adding liquidity on the bid. I took a couple of bits and pieces there off the bottom edges at 5 3/4. I've managed to make some quick scalp profits at 6 1/4. And an easy stop at break even for me on this occasion. Nice easy trade, right? Nice easy trade. So I market made that one. I decided to make a market on that one. I decided to bid into that and offer it quite a distance away on that drop there on the futures. So I was able to buy some product here into that rallying value, and I was able to make a quick profit on that deal. Able to make a quick profit just by bidding into the downtick, into value narratives, and then being able to swing this one around for a quick buck or two. I've just did a little bit more business at 5 3/4. Made some nice money, and you can see the black line is now rotating off that price beautifully. And that was not difficult, was it? That was not difficult. So you saw those ags coming in, and when you saw those ags coming in the very small candles, well, that's not a withdrawal of liquidity. That tells me that the market maker is now agging this bottom edge. They're starting to rotate the bottom edge. They must have a sense that they've got the ability now to rotate this price. So if they've got a sense that they're going to rotate this price, so have I. So that's why I bought some at 5 3/4. So we bought some at 5 3/4. We started to come off that price area there. And obviously we did it over here, we did it here, I did it twice. I shouted it twice. So we did it twice. I did it once there and once here. We managed to rotate up beautifully. And then we did it a second time. We've managed to rotate up beautifully. I'm not saying the market's bullish. If you look at your value, in fact, quite the contrary, the black is still above these value lines, but the market is certainly starting to be more bullish. It's certainly got a more bullish slant to it, isn't it? There's definitely some upside movement. What we need is a discount price now to deal, right? What we need is a discount price to deal. So there's a concept in the volatility trading that we need compensated for the risk premium in this trade. So we need to be compensated for volatilities. So in this term here, I'm looking for that discount price to buy into, for that, basically that compensation to be worked in my favor. You know, and from that point onwards, I'm going to try and bid into these. But obviously, I've not got a very, very big discount. Just by looking at this chart, you can see it's kind of minimal at this stage, isn't it? It's kind of minimal. I'm still bidding bottom edges all the same. Still bidding bottom edges on the S&P. I'm still trying to get that rotational price back in my books. I have bought some more there. We bought some into that dip there. So you'll see the dip on this chart here. We bought into that dip again, into that low price, 475. We paid some 475s for some business there. We managed to get a little rotation out of that area, quite easy. Yeah, quite easy to make a little bit of money on it. Now remember, I'm making a market here. I'm not saying that the market's bullish. I'm just making a bid offer spread here. I'm stacking the bid and I keep pulling away the offer. Stack the bid, pull away the offer, stack the bid, pull away the offer, and try and cycle this money. And obviously, if it breaks out of here, it's going to break north and I can be in it. If it breaks south, I'll scratch out of it, right? It's got a big win proposition attached to it. You can see that the value is starting to just pause over a little bit here. So I'm going to stop being aggressive on the bid now. I'm going to close out my final position there. And I'm going to go flat. So that was good. As far as I'm concerned, that was quite a good little session there. We managed to make some nice money. Reason why I'm stopping is because you can see that the values are now starting to roll back down again here. So I think that we may well be in for a small press. And because of that, I'm not engaged in this particular process just at this point. If the value reestablishes after the press, there's the press, guys. You see it? See it? So I was just talking about the price was going to start pressing, and guess what happened? This is a 15-second chart. The press came in, and there it goes. See it? So we knew it was going to press, didn't we? So I stopped bidding into this phase. I stopped trying to capture that bid, and I says it's going to press, and I said it was going to press on that candle. And that's what's happened since then. Do you see how easy that was to recognize the press? Now you might say, why not sell into the press? Well, because I was getting rid of a long position at the time. I didn't have time to sell into the press. So now we have to reestablish some value. I certainly haven't got any value to start buying into this. You can see the market maker may well be starting to aggregate again in here. So that's good news. They might well be starting to aggregate, but at the moment, the futures is trading at a premium to the stock market. So I think there's still a bit more to be worked into this price at this point. And there it is. Boom. Those suckers that bought 22s. What a bunch of numps. I told you I think there's a lot more to still be worked into this S&P. Some sucker bought some 22s and we just absolutely annihilated them. You see what happens? Some big player came in and bought some 22s and then boom, straight down to 20s. Straight down to 20s. How good was that, guys? And this all came in from my original sell, remember? Remember we'd had the original sell at the cash open? You might recall we sold the cash open up here. And that was our big play coming off that top edge there. We started to sell, what was it, 34.75 or something we got? 34.75, I think it was. So we paid 34.75 for that short position. And obviously the takeaway from that was quite good. Quite good. You can see the bit of value starting to come in, but it's a kind of fair value looking deal at this stage. Fair value kind of deal. So they're going to obviously cause a lot of noise around here. It's going to be like a noisy teenager trade here. They're going to cause a lot of noise, a lot of upset, a lot of people trying but failing miserably to make any money here. Because this is Sweepsville, Tennessee now, isn't it? Sweepsville, Tennessee. I managed to buy 5 contracts and we're making some big money already. I paid 20 and a quarter. 20 and a half for a buy trade there. And you can see what happened. So I paid some 20 and a quarter, 20 and a half for a buy trade there. We bid 20 quarter, 20 half on that big aggregation in the background. It started to go up. So I got a little bit lucky on the spike. You see it? Got a little bit lucky on the spike. And, you know, we got filled on that candle there. And obviously we've just absolutely annihilated that bit of business to the upside. So you can see that trade. I did put it on Ninja Trader as well. You'll see the trade and the trade outcome on Ninja Trader if you wanted to. So we did pop it on Ninja Trader just so you could see it. So we got 5 contracts on that. 5 contracts, $1,500 profit on that trade on a little 5 lot. Obviously, the buy trade was a lot lower. Of course, it was at 20 and a half net, 20 and a half net. And as I said, we got a little bit lucky on that candle spike, but you can see what was happening in here. The aggregation was starting to come in hard. We got a big spike to the downside in terms of net value. There was a couple of things starting to turn up. So, you know, obviously I'm keen to deal. You see, we've touched the first dotted black line. So we're now starting to move to that 2 standard deviations that the market maker is going to start aggregating at. And then when the aggregation comes in at 2 standard deviations, you know that there's a higher probability that that's now going to bite, right? You've got a higher probability that that buy trade is now going to bite on the rotation. So obviously that's exactly what happened. There was a higher probability, and the volume's quite visible, of course. It's the biggest volume of the day. If you can't notice that, you're not going to notice anything, right? And obviously, if you come rotating off of that, it's going to rotate back into this price. That's the bracket at the moment, isn't it? So you've now got a bracket on the S&P. 44.20. Does anybody remember the 44.20 from yesterday? Perhaps, yeah, maybe. Hopefully. It's not a surprise price, guys. It's not a surprise price. We chatted about 44.20s a lot yesterday in terms of the big macro picture on the S&P, and obviously 44.20 is still a little bit of knowledge, a little bit of interest for us, right? A little bit of interest for us. Okay, we move on. What's next, Mike? What have we got next on the slate? I don't know. There was a little opportunity to grab a bit of value on the bonds short sell. You might see it here. You can see that the black line finally goes above the purple line, the blue line, and the orange line. So you start to get a little bit of curve trade available for a short sell on bonds into that. If you're watching for value, that might have given you the confidence to go. Tiny bit of value. I mean, when I say a tiny bit of value, the RSI is still 63, 64s, so it's still quite high up in the levels. And if you took it, you've had a good response to that bit of selling pressure. Very nice indeed, guys. The gold sells rocked on the second leg lower, 32s down to 26s. So I don't know if we've rejoined the sell, but certainly if you did, you've made a lot of money on the second swing lower. That's for sure. A little bit of scalp value there on the S&P. You can see that the black line ends up above the 50. All the other lines are going down or below the 50 anyway. You see that the Prem has a little bit of a premium on the S&P as well. So that was a nice opportunity. I decided to do a little bit of short selling into that. Managed to make a nice quick scalp profit on it. Thank you very much. So like it, probably do the same again sometime soon. I'm watching the order flow, looking for leans. And probably do the same again soon. You can see the black line going up, all the value lines going down. Well, that's not a good sign. So the black line was going up, but it doesn't matter. We're still in good shape on the deal. It's just collapsed in price, which is nice. I got filled at 26.75. So that's made some nice money, hasn't it? 26.75. So you can see what's happened to the S&P. If I go back to this screen here, I've just sold some 26.75s there. So my short sell with that value was 26.75. There was my short sell there. And you can see with the short selling coming in terms of the volatility surface, you can see that we've just had a beautiful little roll off of that price. I did pop it onto NinjaTrader as well so that you could see exactly what we're doing, just as we've done before. Just to show you what we're doing on NinjaTrader, you can see the exact trade that we took. And so that you see that that's exactly what we took. We took 26.75 sell side, quick scalp trade, made some nice easy money on the scalp. And again, you can obviously see that market make process is relatively straightforward for anybody, that wants to kind of jump into that bit of business. Now, the reason why I took the sell, as I was explaining at the time, was because of how the value was evolving, of course. So when the value's obviously got a bit of value here and the Prem has got positive, that means I'm getting premium against the index. I'm also getting a premium, a bit of dispersion opportunity, right? There's a dispersion element to this. So when you're looking at dispersion trading, what are you trading? Does anybody know what you're trading when you're looking at dispersion trading? You're trading the index against the stocks, the individual stocks, right? So when you're looking at dispersion trading, you're trading index versus stocks, and you're building a narrative around index stock rotations. So when we add a little bit of that to this picture, we get this idea that there's a dispersion sale in the futures markets. And again, you're not actually taking the stock position. You're only identifying the stock position so that you can get the dispersion trade on the books. So I like the sell here. It's made me some nice money. The dispersion is available for selling at this price. You can see it's came back off that same price again. I'm still in another sell trade at the same price again. And you can see we've made some nice rotational money coming off of that price. Now, it doesn't mean that there's not a bid here. Of course, there's a bid here. Of course, there's a bid here. But we've managed to get that simple little bit of a dispersion trade narrative coming in off of these 27 prints at the moment. Make sense? And that 27 print, 26.75 print is that trade that we just showed you there. 26.75 short, and obviously a little trade making some easy cash on the short sell. Ab's obviously done his analysis.